Hello and welcome to Preservation Buffalo Niagara's virtual historic tax credit mini workshop. This is a condensed version of the full historic tax credit workshop that we offer, and this mini version will give you the basics of the historic tax credit programs and how to prepare and submit your applications. Just a friendly reminder before we start that PBN works to empower Western New York communities to champion historic preservation as a means of creating a more culturally rich, vibrant, affordable, and sustainable community. And on the slide is our official mission statement encapsulating that. We also want to acknowledge that this video is made possible in part by Erie County and their continued support of our educational programming, and by the PBN membership. We are a nonprofit membership organization. Without the dedicated and generous support of our members, we would not be able to continue our mission to safeguard the unique architectural and historic legacy of our Western New York communities. To help us make more virtual and in-person educational programs like this one, please go to preservationbuffaloniagara.org today and click the Join button. Alright, now it's time to learn about this useful financial resource that's helping to rehabilitate historic homes all over New York State. First, we're going to talk about the different tax credit programs that exist and explore what projects are eligible and not eligible for the credits, and then we'll walk through a homeowner application. So for New York State, there are three types of historic tax credits. The first is the homeowner credit, which is for owner-occupied properties and is a 20% New York State credit. The program is administered by the Division for Historic Preservation of the New York State Office of Parks, Recreation, and Historic Preservation. Instead of that mouthful, we'll be calling them the State Historic Preservation Office, or SHPO, S-H-P-O. Then the second type is the commercial credit, which is for income-producing properties. This is a combined 40 to 50% credit. It's either going to be for projects spending under $2.5 million in eligible expenses, the 50%, which is a combined 30% state credit and a 20% federal credit. And then you'll get the 40%, which is 20% state and 20% federal, if you're spending over $2.5 million. This program is administered by SHPO and the National Park Service, or NPS for short. Then the third type of credit is the historic barn tax credit, which is for barns built before 1945, and is a 25% state credit. We're not going to talk any more about that one in this workshop, but check out our recorded webinar specific to that credit, which is available on our YouTube channel. Now we're going to look at the homeowner and commercial credits a little closer. So starting with the homeowner credit, this is officially called the New York State Historic Homeownership Rehabilitation Credit, and it provides a 20% state tax credit on qualified rehabilitation expenses, or QREs, which we'll get into more in a minute. But first, let's go over the program requirements. Most importantly, the work must be pre-approved. This means you must submit the application form and before photos to SHPO before starting any work that you're hoping to get the credit on. This is so that SHPO staff can review the proposed work and make sure it follows preservation best practices and guidelines. They specifically review all applications using the Secretary of Interior's standards for rehabilitation, and we'll have more on that later. Other requirements are that it must be an owner-occupied residence. That means you must be a New York State resident, and the house you're getting credits for must be your primary residence. If you have an income-producing part of your home, like a rental unit or home office or business, you can still use the homeowner credit. There's just going to be a bit more math involved. More on that later as well. The total project cost must be more than $5,000, with at least 5% spent on the exterior. Total project cost means the total of your qualified rehabilitation expenditures. They must total up to at least $5,000, and whatever your total QREs are, at least 5% of those must be on the exterior. The house must be listed in the National Register of Historic Places or be in a certified local historic district. You can be in the National Register either as an individual property or as a contributing resource to a National Register historic district. And then You can also be a contributing resource in a certified local historic district. As of the present, April 2023, the only certified districts in Erie and Niagara counties are in the city of Buffalo. So if you're not in the city of Buffalo, you don't need to worry about this type of historic district. Finally, you must be located in a qualified census tract or in a city with a population under 1 million and with a poverty rate greater than 15%. A qualified census tract is one where the median family income is at or below the state median family income. And then in April 2019, New York State updated their requirements, making it so that the census tract rule can be ignored if you meet that city guideline, which definitely applies to Buffalo and Niagara Falls, meaning residents of those cities don't need to worry about what census tract you're in. Other Western New York residents, however, will need to determine your census tract or that information, whether your city meets that guidelines, to see if you're eligible. A final point about the basics of the homeowner program is that if your annual income is $60,000 or less, the credit becomes a refund. Now on to the commercial credit. This one is known as the Commercial Rehabilitation Tax Credit, and again offers combined 40% or possibly up to 50% state and federal tax credit on your qualifying rehabilitation expenses. Just as with the homeowner credit, work must be pre-approved to ensure compliance with the Secretary of Interior's standards for rehabilitation. However, unlike with the homeowner credit, there is some wiggle room on this for commercial projects, but that's really specific to the details of your project and the work that's completed, that is or was completed, and is something you'd need to talk about with SHPO staff. Then the property must be commercial or income producing, and the total project cost must exceed your adjusted basis. That is the adjusted value of the property. The commercial credit is a substantial credit, therefore it's intended for substantial rehab projects. That's why, to be eligible, the project cost has to exceed the adjusted value of the property. The adjusted value of a building is the cost of the property, excluding land, plus capital improvements and minus depreciation. So if you've recently purchased the property, the sale price is the adjusted value. If you've owned it for a while, then you can use this equation that appears on this slide to work out what it would be. This is an image taken directly from the National Park Service's tax credit website, so this is how they let you know how to calculate your adjusted basis. As with the homeowner credit, the property must be listed in the National Register of Historic Places or in a certified local historic district. If it's not in the National Register, you do have the opportunity to start a tax credit project while your National Register nomination is in progress. But again, that very much depends on the building in question and is something you'd need to talk about with SHPO staff. Finally, as with the homeowner credit, the property must be located in a qualified census tract or in a city with a population under 1 million that has a poverty rate greater than 15%. So this term that I've been mentioning, qualified rehabilitation expenditures, is basically a fancy term for what expenses you can claim the credit on. On this slide is a list that SHPO created to show the most common expenses that are eligible, but this is certainly not everything. Also note this list is specifically geared towards those using the homeowner credit. Basically, it includes everything you could think of to do within the footprint of your home, from the foundation to the roof, that is a permanently installed change to your property. Now notice I said within the footprint of your home, so you can't apply the credit to outbuildings such as garage or carriage barns. However, the barn tax credit I referenced earlier can be applied to carriage barns, carriage houses, and outbuildings of that nature, not garages. But just keep in mind, you could be eligible to do the homeowner credit on your house and the barn credit on a carriage barn. Take note that the best qualified expenditure is soft costs. For instance, if you're hiring an architect, engineer, or project manager or consultant, the fees that they charge you are eligible, and any permit fees you need to apply for are also eligible. Also, just make sure to remember that if the property is in a local preservation district, you have to get the Preservation Board or Commission approval of any exterior changes you're going to make. Now, this is SHPO's list of the most common expenses that are not eligible, again, specifically geared toward the homeowner credit. In general, things that are not eligible include anything outside the footprint of the house. So landscaping, driveways, sidewalks, and outbuildings not eligible for the homeowner credit. Anything that is removable and not a permanent improvement to the property, such as alarm systems, appliances, decorative items, not eligible. And then labor done by the property owner. While you may want to save money by buying your own materials and doing the work yourself, which is totally fine, you won't be able to claim the value of that labor towards the credit. Now let's talk about the standards that will be used to evaluate your proposed work. As I mentioned before, projects are reviewed for tax credit eligibility using the Secretary of the Interior's Standards for Rehabilitation. Rehabilitation is one of the NPS's 4 approaches to the treatment of historic properties. For each of those treatments, there are both standards and guidelines. For lack of a better phrase, the standards for each treatment are like the 10 commandments of what it means to follow that treatment. On the right side of this slide are the 10 standards for rehabilitation. The guidelines go into much more detail, explaining how these standards are applied to actual parts and materials on a building, and giving recommendations as to what it means to follow the standards while working on your roof or porch or whatever part of your house or building. You can look at these guidelines either by going to the National Park's website, which is shown in the bottom image, or by viewing the full PDF book that they have. That's the image at the top with the black bar. This book has all 4 treatments with all the standards and guidelines for each. It's a very large file, so be careful opening it if you have slow internet. Where can you find all this information on the tax credit programs? Well, I can't stress enough that while we, your favorite historic preservation organization, is always here for your tax credit questions, it's SHPO that is the administrator of the program. You can go to their website to find more information, as well as the links to the current application forms. Here's the link on the slide, and it's also included in the video description. Now let's go through the general historic tax credit application process. There is a part of the application that you'll do before you start work, and a part you'll do after the work is completed. So to start with, you do your part 1 and 2 forms. That's all together for the homeowner credit, but it is actually 2 distinct, part 1 and part 2, for the commercial credit. This can be submitted online or by mail. Once it's submitted, SHPO will review your proposed work and either approve it or contact you for more information or revisions. Then you can actually carry out your project. Once it's done, you submit your part 3 form. This shows you did the work you said you would in the way that you said you would. The final step is for SHPO to review and certify that part 3. You're then able to apply for the credit on your taxes. We're now going to do a quick walkthrough of the homeowner credit application process. So here, as I said, the first step is submitting the part 1 and 2 form, and again, all one form for the homeowner credit. So the purpose of this form is for SHPO to fully understand the current condition of your house and what work you plan to do. And again, you can mail the forms to SHPO, forms and other items, or submit it online. The online version, which is screenshotted here, is submitted through DocuSign. Whether it's online or mailed, your complete application will include the form printed out, it's 4 pages, photographs of your property, and if you're mailing it, they prefer that you send the photos on a USB drive or a CD, a keyed site plan, and your application fee. If you make less than $60,000 a year, you're exempt from the fee. Otherwise, it's a flat fee of $25. And then if your project requires it, drawings or cut sheets. The form is very straightforward, it's short and simple. The screenshots here are from the paper form, but the online form asks for exactly the same info. Page 1 is just basic information on you and the property. And just be aware that if you enter your email address, that will become your official mode of communication with SHPO. And if you think you're missing any emails from them, just be sure to check your spam folder. This is a screenshot of the rest of page 1 and part of page 2. So page 1, this is a checklist to confirm whether your project is actually eligible for the program. And then this portion of page 2 that you can see is showing what you need to include with your application. So the last 2 pages of the application consist of this chart. This is where you'll detail the work you're proposing to do. So you will break up the work by putting one item on each of these rows, and for each one you'll need to give your scope of work and follow the example that SHPO provides. We'll look at that in the next slide, and they have it available on their website in a separate instruction handout. But basically you want to be specific enough. You don't need to go into super much detail and write a whole paragraph. You just need to give them a short, concise description that gives enough for them to fully understand what is the work you're doing. And then the estimated cost column, that really is just an estimate. You don't need to give contractor quotes or anything. So here's the example that SHPO provides. And you know, they've carefully given you a certain amount of space, and you really can just make sure to fit your explanation into that space. No need to go longer, no need to, you know, attach continuation sheets or anything. That should be plenty of space for you to describe and describe the work in enough detail for SHPO to evaluate it. So going over what you need to attach to your application. You need to include photographs. These are principal photos of the property, giving general views of the existing conditions. Make sure they're detailed images. If you're replacing a specific piece of woodwork, take a picture of up close of what is there now. If you're doing a mailed application, put digital photos on a CD or a thumb drive, or if you must, you can print them. That's not preferred, but if you do, they should be 4x6 and in color. Each picture should be named with a number or location and keyed to the site plan. We'll talk about that in a minute. Drawings, cut sheets, or shop drawings are optional, but if you are altering or replacing historic materials, then you must include drawings. Here are 3 different site plans. So this is how you tell SHPO where your photos are in the home. You can make a copy of any blueprints or architectural drawings and use that as the basis for your site plan, or just draw your own floor plan, whether on the computer or by hand. You just need to show the general layout of the house and then indicate somehow where you stood when you took the photo and what the photo is of. So that's what these arrows are showing. Someone stood here and took the photo looking the way that the arrow is pointing. So once you've submitted your part 1 and 2, SHPO will review it and then they'll issue a letter like this one. And this letter is approving what you submitted. They might include some conditions, but then once you get that approval, you're able to start the work. Once all your work is done, you need to submit this Part 3 form in order to claim the historic tax credit on your taxes. Just like with Part 1 and 2, this can be submitted by mail or online. It's very simple. It's just to confirm that you did the work you said you were going to do. And And note the first thing listed on the form that you need to fill in is your project number. This will appear on your approval letter from SHPO. Then you'll need to submit after photographs, again with a site plan. You should just use the site plan that you already submitted for your part 1 and 2, stand in the same place, take the photos from the same angles, showing what you changed. And then there's going to be another fee at this point. This table that appears over here on the right shows what the fee is, and it's based on your final expenses. Part of that Part 3 form is filling out a similar chart to the Part 1 and 2, just saying what work you did. You can just base it on the list that you gave them with the Part 1 and 2. Again, here are examples. You only need to give a basic 1-sentence description of what you did. The photos are what they use to see the detail of the work. Then you're going to give them the amount that each item cost, and that's what they use to determine your credit value. While these examples have nice round numbers, you should use the actual accurate numbers that you paid for the work. Make sure you only include tax credit eligible work. You might have a single invoice from a contractor that has a mix of tax credit eligible and ineligible items. In that case, you'll need to do that math to break out the eligible items and only include those on the form. But no need to submit invoices or receipts or anything like that. SHPO doesn't need any proof, they just want you to give the numbers. After you submit that Part 3 form, SHPO will review and then send you another letter. This is called a certificate of completion, and it confirms that your project is eligible for the tax credit and also confirms the amount. Whatever year the letter is issued, that's the year for which you have to claim the credit on your tax return. If you don't claim it for that year's taxes, then you miss out. Make sure the number in their letter is accurate to what you were expecting it to be, and then to claim the credit, you'll need to use the IRS form IT-2, or the New York State tax form IT-237. Here is that form. So when you go to file your state taxes, just fill out this form and include it with them, and make sure you're using the correct year. So that's been a basic overview of the process. Now, just here at the end, we're going to briefly go over this special scenario that may apply to some people, and that is a homeowner application when you have an income-producing portion of your home. So these little pictures are illustrating you may live in part of your house and rent out the rest, whether it's half and half or 1/3, 2/3, and you can use the tax credit in this situation, but you're going to have to do some more math to figure out what exactly is eligible and what isn't. And that's because you can only claim the credit for interior work on the part of the house where you live. For work done on shared spaces, which includes the entire exterior, that's automatically considered a shared space, you can claim a partial credit based on the split in the living space. And shared interior spaces may include basements, attics, common hall, or stairways, for example. The split corresponds to the square footage breakdown that you claim on your taxes. So for example, on this left picture, if you live in half and rent out half, you can claim the credit on everything you do in your living space. But for the exterior and any shared interior spaces, you can only apply the credit to 50% of that work. And you can't apply it at all to the interior space where your tenant lives. The right shows a breakdown where you live in 1/3 and rent out the other 2/3. So again, for any shared interior spaces and for all exterior work, you can only take the credit on 1/3 of the amount that you're spending. So for example, here's a chart showing what that would look like for your 50-50 split. The second column, total QRE, shows the money that this hypothetical homeowner is spending. On those totals for the exterior work and for the shared spaces, you have to split that amount in half to see what's actually eligible for the credit. To know what your credit amount is going to be, then you can multiply each of those by 20%. So you can see for the homeowner interior, the QRE is what's eligible for the credit. It's the same, that $10,000. But for exterior work and shared spaces, you have to cut that total number in half. The second number here under eligible QREs for the credit, that's what has to meet the $5,000 5% rule that I mentioned at the beginning. That is that the total you spend must be at least $5,000 with at least 5% spent on the exterior. So for this person, this little made up example, 5% of their QRE, this 14,600 in that second column, would be $730. And that's what must be spent on the exterior. Thank you so much for watching, and if you have questions about anything said in this presentation or about your specific project, please don't hesitate to reach out to us at this email. Thank you again.